Hi, everyone, and welcome to the first episode of the Pioneers of Bitcoin. We will do this podcast as an independent podcast going forward. Besides our other content here at the 21st Capital YouTube channel, we will post this podcast on all of the podcast apps like Spotify and Apple and Google Podcast. And we will keep posting stuff on the 21st Capital YouTube channel for our tech area, but we have decided to start a completely separate brand that talks about Bitcoin, and it will be about the price action. It will be about Bitcoin in general, but also tech stuff, but it will be more of a podcast format. And we will just see how it goes and how we continue with it. But today I decided to record the first episode of this podcast about the recent price action. It couldn't be a better time to actually talk about what has happened. We've seen really crazy price action in Bitcoin, and everybody is asking themselves if this is actually it, if we have hit the top of this cycle, if Bitcoin is going to go down from here for another year or 1.5 years, just like we've seen it in the past, and what do we actually think is going to happen. Have fun in the video. Okay, so if we actually take a look at the price action, you can see if you zoom a little bit out, we have obviously had this drawdown that everybody is now talking about, but we had Bitcoin at around 50,000 just a year ago. So we are still in an upward trend, as you can see here, but everybody's freaking out because everybody is just panicking and remembering the past when we actually had a bull run up until 70K and we had a bear market for 1.5 years, and everybody is scared of that. Obviously, there's lots of reasons why Bitcoin is going down, but I'm going to actually boil down what I believe is the reason. I mean, there's a lot of speculation going on where people say, yeah, the OGs are selling Bitcoin, that's why Bitcoin is falling. I think the reason Bitcoin is actually falling is a different reason, and I'm going to dive into it. So let's actually zoom a little bit out and look at the big picture. We had President Trump coming to power, and ever since he came to power, he first tried to he had actually very deflationary policies in plan. With Doge, they tried to get the costs of the government down. They tried to actually tax everybody who is, I mean, they had all the Chinese deal or the tariffs that they put in place. That all put pressure on the money printer, right? So we didn't have a big amount of money being printed, whether it's on a monetary policy level or fiscal policy level. We haven't had the liquidity injection into the fiat system ever since Trump became president again. And despite that, we saw Bitcoin ripping higher and higher and higher. And obviously, the reason for that was obviously the ETFs, but the second reason was because of the pro-Bitcoin or crypto policies of Trump and the strategic Bitcoin reserve that he had promised during his campaigns that drove the price higher and higher and higher. And I think the market is just realizing that, hey, we actually don't have as much liquidity as expected, and we still haven't had rates coming down. And accordingly, the price is being corrected downwards, and things are now a little bit more realistic. And I think we had an overheated mini bull market because of everything that happened with the elections and the ETFs. But now we had a cool down period, which looks to me just as a very, very normal correction. And depending on what's going to happen next month, if we can actually expect things to turn around with cutting rates and more liquidity coming into the system, we, in my opinion, will see higher prices in Bitcoin, but also everything else. Before actually we talk about that, I thought it would be a great idea to talk about one topic. I was at a meetup just a few days ago, and there was somebody that I talked to at the meetup. It was a Bitcoin meetup, and he was talking about this scenario where we would basically go into a phase where everything's going to crash, and we will have a complete dystopian situation where everything is going to crash and everything is in a bubble right now, and we have to see lower prices because everything is on such delusional valuations. And to his point, this is actually a normal state of things. If something is overpriced, you should have a huge amount of crash once you see the markets come to its senses. But unfortunately, the reality is that ever since 2008, everything has become completely unrealistic because we actually never had a crash in 2008. We had a mini crash, and you can actually go back and look at gold and see that after 2008 happened, after that financial crisis, the gold price also crashed and everything recovered afterwards. And you have to ask yourself, why did that happen? And could we actually see something like that again? And how likely is it? And I also saw a video that I would like to share with you guys, which theorizes that scenario. And I'll just play it really quickly for you to see it. This is Tom Bleo. He is actually a semi-Bitcoiner. He had, I think, Michael Saylor on his podcast and many others, and including Ray Dalio. And he understands the financial market, but he misses one very, very, very important point that I will get into after just playing a short clip of this video.
2008. The housing market is euphoric. Everyone believes it is going to go up forever. Everyone, that is, except the quants who see the truth in the numbers. They know what the rest of us are going to find out very shortly. The housing market is a giant bubble and it's about to burst. The numbers just don't add up. The subprime mortgages are a ticking time bomb. Given the default rates, collapse isn't just possible, it is mathematically certain. And then it happens. Bear Stearns vanishes in a week. Lehman Brothers collapses under hundreds of billions of toxic assets. Within days, the global credit freezes and entire industries flatline.
Okay, so let's dig into that. He's not wrong. This is literally what happened. But if you continue the video, you will see that he is basically theorizing that the same will happen sometime in the near future. And it's definitely on the table, which I don't want to completely deny. But let's look at who actually profited from this crisis. Remember this guy. This guy was, if you watch the movie The Big Short, if you haven't watched the movie, it's one of the most financially educational movies out there. Watch the movie and you will know who this guy exactly is. So this guy became famous because he shorted the housing market in 2008 and got really, really wealthy and made his clients also very wealthy because he was right. And he bet against the market and the market crashed and he profited millions of dollars. I don't remember the exact number. But now, very interestingly, just last week, we see that he actually closed down his asset management company because he got margin called and he cannot make sense of what's happening because his philosophy is not working anymore. And you have to ask yourself, why is he shutting down his fund, but why is he not right? And actually, he is right, but the problem is that we don't want to admit that somebody like him is right, and we want to avoid the consequences of what should happen. And let me phrase it differently. So if you owe a lot of money and there is valuation of assets that are completely unrealistic, you normally should have a deflationary phase where everything crashes and the economy slowly comes back on its own. The free market basically comes back on its own and everything should become normal again and the economy should thrive on its own. But what happened in 2008 was we had the crash, but because the crash was so consequential and the banks that were involved were so big that we could not let them fail. And what happened was we actually did not have the consequences of what should have happened. Nobody went to jail, and we injected artificial money into the system, and we just postponed the problem into the future. And what makes you think that we won't do that again? If the bubble was back then very, very big, the bubble is at least 10 times higher now because we have just inflated over and over and over that problem over the past 12 years or over the past 15 years actually, ever since QE started, ever since the money printing started since 2008, we've just postponed the problem. And if you look at other places on planet Earth and if you just study this topic, you realize that this is nothing new. We always owe ourselves too much money until we default, and we just print more money than we have and we default. And what happens at the end is that the currency collapses. The market doesn't crash and everything bursts all of a sudden, because there's only two ways out of this situation, right? There's only two ways. Either this thing completely collapses and we live in a stone age and we just exchange goods for goods and society breaks apart because everything is based on debt that we don't actually have the money to pay back for. Or we just inflate our way out of the situation by printing more money and paying each other back. And that's exactly what's going to continue to happen. And that's exactly the reason people like Michael Burry are going to go bankrupt, because the theory of things bursting downwards don't work anymore. The burst is upwards, just like it happened in Turkey, just like it's happening in so many other countries. In Venezuela, you don't have a deflationary crisis, you have a hyperinflationary crisis. Prices are skyrocketing. People are becoming billionaires and trillionaires, but nothing is valuable anymore. The prices of everything goes up, but the value of money goes down at the same time. So this is the problem we're dealing with, and that's not going to stop. There's actually no single sign that this can actually be stopped. It can't. Like, Elon tried to do it with Doge. He failed. That's why he failed, because they realized that they cannot stop this money printer. It's impossible to do it because we owe so much more to each other than we make, that the only way out is just to print more money. And who's going to pay at the end? That's the question of all. It's the saver, right? So if you save in dollars, you're going to be able to buy the same things you could buy today in 5 years. It's that simple. So the purchasing power of the saver goes away, and that's how we basically get rid of the issue. That's the only way out. That's the only way out. Let's look at some numbers. Okay, so this is the S&P 500. Okay, so the S&P 500 looks glorious. If you look at its price action since 1971, I look at 1971 because 1971 was the year when we closed the gold window. So the dollar was not backed by gold anymore on August 1971. You see, we had the most glorious bull market in centuries. If you look at, one second, let me actually draw a line. So August 71 was somewhere here. Okay. Up until today, this is absolutely nuts. Okay, this is a price increase of 7,528% in dollar terms. So everybody is happy, right? We made so much money. That's what most people think they did. Okay, let's actually flip it and let's actually price the same index, the S&P, in gold for the same period of time. This is the S&P 500 against gold. As you can see, actually, if you zoom out, we have August 71 here. We are down 25%. So in dollar terms, we made thousands of percent of profit. Everybody thinks it's profit. But if you price it in gold, everything is lower compared to, what is it? 55 years ago. 25% lower. So the boom is just an illusion that people have in their heads. It makes you feel rich because in dollar terms, you feel like you have so much more dollars, but you actually cannot buy the same things with the same amount of dollars that you could. And that is the problem, guys. The problem is that the dollar is being devalued in front of us. And everybody is thinking, oh my gosh, what's actually happening? I should buy the S&P 500 because that's how I will actually become rich. That's not the case. Nobody is becoming richer by holding the S&P 500. The S&P 500 is down since the past 55 years. And it's also down against gold since 2000 and 2008. Okay? It's not up. It's actually flat since 2008. Nothing happened. So that's what's happening, everybody. There is no free lunch. If we print money and we don't produce and things become more expensive, assets become inflated, there is no new wealth created. The only gains that you see is on paper, but you cannot buy more things with them. It's an illusion. It's a monetary illusion. Let's look at actually the S&P now against Bitcoin. This is the S&P against Bitcoin. It's in a bear market since 15 years. Nothing has gone up against Bitcoin. Nothing. Even gold is down against Bitcoin. But let's not get into that. So this is the reality. The reality is that we are actually collapsing, but we are collapsing in dollar terms upwards. So everything that this guy is talking about, that the collapse is coming, he is valuing everything in this currency. Where is the collapse here? I don't see a collapse here. We have some drawdowns. Yes, we do. That was '08. That's what he's talking about. He's talking about this tiny crash here. There is no crash since over 55 years. And the reason there is no crash is because there is more dollars and there is at least the same amount of goods and services. If we would produce the same amount of goods and services in the economy, then prices should stay constant, right? But because there's over time, there is more dollars than goods and services, prices keep going up. And asset prices drastically go up at the same time. So this is an illusion. Like if you believe and you, actually, I would not bet on this tiny little crash here. How you actually become wealthy is to protect yourself from the devaluation that is happening. This is a currency crisis. This is not something that you can call a bubble that will burst at some point and everybody with dollars that stayed on the side will become wealthy. That's not what's happening. You might see a crash. Yes, you might see a little crash here, but they're going to pump it back up because they have to. Because if they don't, you are going to have all the gains ever since the beginning of history erased. That's what's going to happen. Because everything is based on debt. There is nothing backing this thing. Ever since this date here, it's all backed by just trusting the government and nothing else. And that's what we got. But if you have something that is finite, like Bitcoin, of course it's volatile. Yeah, gold was also volatile during the Weimar Republic, right? In Germany, when we had the hyperinflation. Gold was going up and down drastically. There's actually a chart of that. Let me actually try to find this chart, which shows this is it. Look at this. This is the gold price in Weimar marks, and let me make this a little bit bigger so you see it. Okay, so this is the gold price in Weimar marks during the First World War. You see these price spikes and crashes, but look at what happened at the end. We ended up in billions and trillions of dollars of marks of gold price. And that's the percentage in price change. Yeah? You see just drastically going up and up and up. It's a volatile and crazy roller coaster, but it's not because gold is or was volatile. Gold was constant. Gold has not had more than 2% inflation in the past 100 years. Okay? So you have to understand the problem is not the finite or scarce asset. The problem is the currency. They keep printing, and during their printing phase, they have this burst phases that you have these crash experiences on the way up. But over time, it just goes into one direction. By the way, this looks very similar to this chart, which is pretty crazy. So actually, hyperinflation is happening in front of our faces against Bitcoin. If you look at the Bitcoin price in terms of dollars, we're already in a hyperinflation of dollars against Bitcoin. You see this? And everybody's talking about a bear market. Obviously, it's very difficult to time these bear markets. You don't know when they will happen. You cannot draw a line on a chart and say, okay, because it happened 4 years ago, I'm definitely sure it will happen this year as well. It's literally impossible to do that. So that's my take. Will we have a drawdown below 85,000 or 81,000, whatever? Maybe. But let's not forget, the Fed, yeah, there is rumors that they might not cut rates, but we haven't had the liquidity injection that we had 4 years ago. We had liquidity injection in 2020, right? So 1 second, let me show you this M2 money supply chart. Is it this one? I think it's this one. Okay, so you see in 2020, you had this spike of liquidity, right? And this is 2020. You had this spike of liquidity. And in 2022, they started to actually lower the balance sheet and the money supply. And ever since then, we haven't really had any spike, right? We haven't had any real spike in the money supply. And could it come down? Obviously, everything is possible. Everything is on the table. But my point is, if Trump wants to actually have his administration get the re-election, he cannot continue with the same policies. That's why you have him talking about stimulus checks right now. He literally wants to do helicopter money next year because he needs people's votes. That's how it works, guys. That's how it works. They are going to print again, and they haven't printed yet. That's why you had Bitcoin go up, ETFs, obviously pro-Bitcoin administration. Everybody expected the 4-year cycle to be intact, and the ETFs came into place, and Bitcoin did go up. But it was actually a phenomenon, like a positive phenomenon, and a surprise that it did go up because we didn't have as much money printing ever since that time. The money printing hasn't even started yet. So my point is, I'm still bullish. It might change, obviously, if we don't raise funds, if we don't lower rates, which I doubt we won't. If the Fed suddenly decides to not shrink their balance sheet, we might end up in lower prices in Bitcoin. But I doubt. Like, if you have learned anything in this market in the past 5 years or 10 years, for how long ever you are in the market, even if it's not Bitcoin, even if it's in any other market, the one thing you have seen is that the money printer will always happen, period. There is no alternative. We have blown this system so big that it is literally impossible to shrink it. So the crash is coming, but the crash is not going to be down. The crash is going to be upwards. The same crash we've had since over 50 years, the crash is upwards, like it is in every single fiat currency. That is my opinion. Guys, I hope you enjoyed this episode. I'm trying to keep these episodes as short as possible, but make sure you follow us on every platform. If you're watching this on YouTube, give us a thumbs up. If you have a question, ask me any question. We go through questions every single time. You can put your questions in the comment, and I'll see you in the next video. Thanks for watching.